All right. Good morning, everybody. Happy New Year. That is right. It is the third day of January 2023, and we are starting off the year right. We're going to start the live stream schedules. Everything is going to be right back to normal now that the holiday season is over. I love the holiday season. I absolutely love getting into the spirit, buying the tree, smelling the tree. But yesterday we took down the tree. So it is back to business as usual. We will be looking at these markets and trying to find intraday, intra-week, intra-month, intra-quarter, and intra-year opportunities. I hope you are ready to crush it. If you are new to this channel, welcome. But please make sure you hit that subscribe button, smash the bell notification, as you will not find a trading channel on YouTube like this one. We take real live trades. We give out entries, we give out exits, profit targets, stop losses, all that, you name it. First thing that we're looking for this morning is a potential long on Bitcoin prices that are relevant. $16,714. That would typically be the entry. $16,703 is the area at which, if we get an hourly close under there, then we know we are wrong on the position. We are definitely long and strong today. There is a few things that's going on in the market that could suggest that we would be looking for shorts. It's just one of those things that I got going on here. It's called an opinion, and my opinions are right more often than they are wrong. That is why I am on the other side of the microphone. What is up, trade talkers? Thank you guys so much for being here. First and foremost, I must always say that. Thank you for all the support that you give to me week in and week out, month in and month out. I really, really appreciate you. And to the 70 to 80 real hardcore believers out there, thank you so much from the bottom of my heart. So, yeah, this is what we're waiting on. The Trade Talk community already knew about this entry before it happened. I don't know that it's going to play out. The area of which that I would be looking to take profits would be here, entry there, take profits there, simply because that is intraday resistance. And, depending on where you got your stop loss, if you put your stop loss where the green line is, entry here, then that is a 2-to-1 risk to reward, and that is how we operate. So essentially, that's, let me just do this real quick. I just posted it in there at 8:42 a.m. So going back to the 5-minute time frame, you can see right here, you had an opportunity when I posted it to take the entry right there. That's your entry right there. All right. One test. This one looked like it was going to go, but it didn't. Come back in. Two tests. You could consider that a test, if you will. And now you're getting expansion. Now we are 20 minutes away from the New York Open, so anything that happens here could be faded there. The reason I say this, that is your profit target area, so you will be taking profits right now. That is why you get such a violent reaction coming into that price, because I am not the only one that trades this way. All the other professionals do the same thing. So you get a violent reaction there. So that is why that is the profit target area. Make sure you take your profits. If you do have a platform like TradingView or whatever you're using, simply take your stop loss and drag it up to break even like that. That way, if price turns around, comes back down, you get stopped out, but you made money on the trade. You had already taken profits. You've already been paid. Now nothing can happen to you. Random market violence cannot stop you out. Unfortunately, the YouTube stream just got kicked off a little bit too late. Again, apologies for that. There will probably be another opportunity to take another entry on this if it is going to be a long trade. As a bounce from this area, it's expected, right? Because that would be intraday resistance. Anybody that looked for shorts here, based solely on this being your supply zone, you can see here that price did have a big reaction there, but you closed inside of it. So that should have been a warning to you that if it was going to be a short off supply, you would have wanted to see that take place almost instantaneously. It did not work out for you. Yesterday, the short, if you were watching resistance, you took it. It did not work out for you. There was the stop run. All the stops above this. This was the high of day yesterday. So once you did purge the high of day, or when you ran above the liquidity from the high of day, that means anybody that got short in any of this price action more than likely had their stop setting right there. This takes all the retail, all the rookies out of the position, and then runs down violently, making people think that it is going to be a short trade. Like this was the weekly supply zone. All right. I posted that on Twitter yesterday saying that this is the reason why you're getting a little bit of resistance here. But since price is still hovering there, it kind of makes me think that we may be looking for a little bit of upside. Now, I really don't like the fact that Bitcoin is going up. Let's be clear. The first couple days of the week, but this is different. This is the very first week of the very first part of the new year. So, your typical 2 days of downside could lead to an upside weekly expansion. That typically will not apply here because we have seen prices trade away from Bitcoin, which we are going to discuss on this channel today when we do have a little bit of downtime. I'm going to show you how you can identify potential yearly trends, something that most people don't even know how to do. So let's give this a little bit of time to play out here. Remember, white line, weekly supply. I will show that to you one more time. It is right there. That is your weekly supply zone. You did get a breakdown. You did get an expansion. You did not take out this low. So it would lead short traders to believe that this is the retest off of this range expansion. This range expansion also took out support to the downside. So until you get a weekly close, you're back above 16,741. There is still a massive threat of downside potential. And this being the target. Okay? So, yeah, keep that in mind. Also, if we go over here and look at the dollar, I understand that, that's two different biases, Mr. Trade Talk. First, you're telling me I'm looking for a long. Now you're saying that there's a potential short on the table for the weekly range expansion. Yeah, that's how day trading works, right? We're looking for intraday opportunities off of small areas from the inside daily range. But sometimes we are trying to position ourselves for the high or low of the week. Here is your dollar. The dollar just opened last night. Look at that reaction there. That is a pretty bullish reaction. Here's all week last week. Yesterday, right? Something's going on there. What? I have no idea. Is this people buying the dollar at the beginning of the year? Definitely looks like it. Or could a massive short position have come off? Yeah. Because in the grand scheme of things, it's not really that big of a move. You know what I mean? Like if you're short from where we're short on the dollar, which is right there at 113.90. That's where we're short. If you're short where we're short, this really ain't nothing in the grand scheme of things. It could just be a massive position taking profits, and that's it coming into the end of the year. And it's just getting filled as the marketplace opened last night, as that's the way it works. I know I do sound congested and like I have a cold. That is because I do. My girl got sick on Christmas Day and she is still not feeling well. I got sick a few days later. I am still not feeling well. But we're going to move right along. So yeah, big move there on the dollar. I took a long position on the euro this morning off of a bounce. Just looking for a bounce right here. So basically my long entry on the euro was right here at this area, exact price, 1.05285. That was my long entry. I was only looking for a 2-to-1 risk to reward. It was simply a bounce trade. That means I'm only looking for a bounce, and I'm looking for a bounce to a 2-to-1 risk to reward. So roughly right in there is 2-to-1. That was my risk. This was my reward. So I have taken profits. I've moved my stop to break even, and we'll see what happens. The reason I did that there is because you got a lot of support confluences down there. We got a daily support confluence here. Let's get rid of all this stuff real quick. Monthly res, perfect tag of monthly res. Then you put in this ascending wedge, which is typically looked at as a bearish pattern. But you got that daily support down there at 1.05337. There is also weekly support. I don't know if I said supply, I meant support on the daily. You got weekly support here. All right, you got quarterly demand there. Not quite a test of that, but still, it's there. You have yearly support there. See that? Right there. So, also on the daily, you got a 50 spot on your RSI. So just quite a bit of support confluence coming in, right there. So when I took the long trade, that trade is over with and done with. I do not believe that you should be looking for new bullish entries on the euro. If Bitcoin is to go up, I would expect the euro to do the same thing, but the euro does appear to be breaking down today. Here is your support. You are losing that support. So depending on how the euro closes today will determine what we're looking for moving on. But this first initial move lower on the euro could absolutely be a weekly low. This week's low. So if you get a weekly range expansion, you almost got a bearish weekly engulfing here. You didn't take out last week's high, so it is not a weekly engulfing, but it is damn close to one. All you had to do is just peak above 1.073133, and you would have absolutely made that an engulfing to the downside already. So it does look absolutely disgusting, and it does look a little bearish. Longer term, this thing has been trending to the downside, but we have a yearly opening range right here. So a lot can be going on. A lot. You got portfolio adjustments, new positions coming open today, new positions being open today. Still a lot of negative news out there, still a lot of uber bearish stuff going on. The Fed's still going to be hiking rates at least to the tune of 25 basis points moving forward. Some say 50, some say 25. Doesn't matter. That is still a hawkish Fed. A hawkish Fed is typically bearish for risk, but we'll see what happens. Nobody knows the future. That's the beauty of trading. Good mornings, everybody. Good morning, Aaron C. Happy New Year, bro. Thank you so much for the super chat, my friend. Thank you so much for that. All right. So, if you do not know, we use Bitget over here. Bitget is the exchange that I use. Be very careful when using offshore exchanges. Hashtag FTX. Because, you never know. So only put an amount of money on exchange that you are okay with losing, because they have up to 125x leverage. So you do not need to hold your entire life savings on exchange in order to make money, enough money to make money to do your week-to-week living expenses. You can simply hike up that leverage slider. Give me 1 second, please. All right, back. So I lost what I was saying there. Give me 1 second. Let me see if I can remember. Hmm. Damn it. That's okay. We'll just move. Keep it moving. Keep it moving. Keep it moving. That's all right. We know what we're doing here. We're professionals. But anyways, yeah, a lot of stuff's going on at the very beginning of the year. So what we can do as we're waiting on the open here. Let's get back over to Bitcoin. See how Bitcoin's reacting there. So typically what this is it's an intraday trap. This would have been support for everybody fixing to ask the question. Right there would have been the intraday support. This is typically the area that we would have been watching for entries, for long entries, if we had a long bias based on this as being the operating range. You clearly have your upper operating range here. So this is the range at which traders are taking positions. You can clearly see that from the candle bodies, not the wicks, the bodies. Here you have a peekaboo down below. Boom. That's a breakdown, right? So technically that would be showing you signs of a breakdown of support, looking for prices to move down lower. Then you immediately turn this candle into a trap by taking out the high of the breakdown candle. So any retests back into this candle's open is the long entry. That is the demand zone. And that would have been the entry. Okay? Right there. Up. You're only looking for your operating range. Those are your targets. Always. The reason it's your targets is because that's where everybody's moving. Now, understand, that's not a big move, man. Not in Bitcoin land. That's barely a $20 move, right? Barely a $20 move. But with leverage, you know what I mean? You can make a little bit of money. And that's all you strive for. Base hits here, base hits there. Make profits. And you might get lucky and find something that takes place at the open. For instance, price may continue to rally. That's what we have been doing since the first of the year. Let's go get the open of the year. And that would be a nice transition. Let's get this off real quick because I'm not ready to talk about that just yet. All right, so the S&P 500 moving up today from yesterday's open. The market was closed yesterday. They observed the holiday. If the holiday's on the weekend, big holiday, Christmas, New Year, then that will be observed. That will be observed on the following day. So Monday was the day that it was observed. That's why the stock market was closed yesterday. But since the open, you can see you had a slight move to the downside. This was Friday. These 3 hours there, that's your close. Here is your open right there. So if I put a line on the chart marking the daily open, there's your daily open. Price goes down, sets in a low during the Asian session, trades away from that. During the London session so far has marked a high of day, but you have been struggling to break down below intraday support, which is that bearish close there, or your daily open. Also, if we pull up this little indicator here, it's going to show us where the most volume is traded today. And currently your point of control is where? At the open. This is suggestive of bullishness. Now, it does not mean it will continue up, but people will read this as a bullish move. So if price starts breaking down and closing below this, you're going to see a rapid descent, probably down to the low day. You're probably going to see a fresh low of day even, because a lot of long traders will be stuck at that point. Anybody that got long 38.49 on the futures, because you can trade the futures 24/7 or 24/5. This asset is not open on the weekend, but on Oanda, this is a CFD product, but it's tracking the E-minis, the futures contracts. It's a CFD though. So yeah, you can see how that would cause massive traumatic move to the downside because of all the long traders stuck, right? If it doesn't go up from the open. But now that we're getting really close to the open, it's 9:29 a.m., meaning you got 1 minute on the open. We're going to see if this intraday support area holds or if the open holds as support. If it does, we would probably be expecting that move higher. I don't know that you just can't target the high of day. You would have to target intraday resistance. So a tight operating range here. As long as you don't close under 38.55, which is this white line, then your intraday target could absolutely be the high of day at 38.80. 38.80. That would be my bullish target. That's where I would be taking profits. Trading well above Friday's high, trading well above Thursday's high, trading well above all of these highs. This high is the last high to liquidate. So if it is looking to liquidate the highs, which it probably is, because you had these lows to liquidate down here, and then price looked bearish. Comes all the way down here, sets in a low of day. So this would have had bearish traders looking for pullbacks to get short, targeting this swing low liquidation. That did not occur. In fact, what happened was the opposite. Those short traders got stuck, and that's what gave us the rip to the upside. So my opinion is, maybe price is looking for that. But the market typically likes to hurt the most. It typically likes to hurt as many people as possible. So wherever the orders are skewed, meaning, leaning heavier to one side, the opposite side is typically the side we would look for that to take place. Now, short traders that are looking for sell side entries off of weekly supply, since I've been rambling my mouth, you have had opportunities to get short there. And you do have a hive day to mark your risk against there. So I am not short. I do not have a short bias. If I did, I would have waited for that and would have taken that entry. I'm already up on the week. I'm already doing good. I'm 2 for 2. Well, I'm 3 for 3 because I got long on all 3 accounts. On the Bitget platform, there is a referral code in the description. Before that, XTSC, that is X-Ray Tango Sierra Charlie. If you want to use Bitget, please use that referral code, and thank you in advance. Happy New Year's. Yeah, Happy New Year's. Andrew says SPX daily resistance at 38.88. Yep. That's why you're having trouble breaking up above that, right? Let's go show everybody what he's talking about for all the new people that are here, or if anybody is new that is here. That would be daily resistance. Yes. We use objective resistance and support levels here, not subjective ones. I don't know if you guys can hear that mowing in the background. Hopefully you cannot. Solana, 50% in 4 days. Let's go look at it while we're watching here on the open. Nice. Why is that, you think? People are buying the beginning of the year. That they typically do, right? They typically do. There goes Bitcoin ripping shorts faces apart. My short entry for the USDT side of the platform, long entry 16,551. For the Coin M futures, 16,541. And then the USDC, all 3 of these positions were taken that night at 16,550. Give me 1 minute. Let me tell him to go mow somewhere else. Sorry about that. I don't know if you guys can hear it or not. With the new microphone, it shouldn't be too much of an annoyance, but it makes me feel like I have to talk louder over it. So I told him to go away. Go away. Come back later. He probably thinks I'm a dick, but I take care of him, so it'll be fine. But yeah, 16,550-ish is my long entries. Translated to that, you can see that's pretty damn close to the low of today's candle. That is where I took the entry for the upside. I've already taken profits on those trades and moved the stops to break even on all 3 of them. So if it wants to continue to the upside for the rest of the year, I'll be happy. Do I think that is going to happen? I doubt it. It's very unlikely. All right, so while we're giving the market time to suss out direction here, yes, Solana is up big, but Solana was getting absolutely wrecked due to FTX. Absolutely wrecked. I mean, look at that. So it is up 50%. That's nice. But overall, I mean, year to date from last year, that thing is down almost up like 90%. It's not good, right? Not good at all. But yeah, 50% returns is nice. If you did get long down there on that wick, kudos to you. Yeah. At the lows, you were down 96% on Solana. So, I mean, the damage is done there. There's only pretty much one way it can go from now, if it is going to be an asset continuing in the future. Like, if Solana's going to be around for a long time, we're probably getting pretty damn close to making some lows on a few of these alts. So the smart money, or the smart money approach to your alts that you love right now, would be to take a small amount of money and start buying a few of them. Not a lot. You're not looking to get rich overnight. You're looking for long-term equity growth in your portfolio. So you want to take small bites, because the bear market lows may not be in. It would be absolutely nice if they are in, but we just won't know until, time moves on, if it is going to be that way or not. Now, we do know that trends do get associated early on at the beginning of the year, and we're going to go over that right now. We're going to transition to that right now. So let's do that. First, let me start by doing this. Anybody that's been following me for any length of time knows that we were telling people to look for the market to have a potential bearish reversal up at the $55,000 to $50,000 area, because in November we knew the Fed was going to do a 180-degree pivot from their uber dovish monetary policy to being extremely hawkish, because they had to fight a rising inflation, a rising CPI number. We knew that. So we flipped our bias here on this channel and started telling people, that is going to seriously change things, and that Bitcoin would likely take a massive hit, because it is a risk on asset. It does follow really closely with the risk on bid. So if risk on assets are moving higher, if you have growth moving higher, then Bitcoin is considered growth. It is a very risky asset. So that pretty much marked the top for Bitcoin, and then it rolled over. Then I made a secondary call short trade for a fresh 2022 yearly high that happened in March. We were looking for that, a fresh yearly, or a fresh test of the yearly opening range for 2022. And if we were unable to get any bullish reaction above the yearly open or above 2022's high, then we were going to short it. This was that trade right here. So this call out, if you will, took place I don't know if this is when I did it, or if the original, I think this is when I did it in April. You can see here, March, April, somewhere in there, right? There, everybody was calling this a Wyckoff accumulation. There was on-chain data screaming about this thing moving to the upside. I'm talking a lot of people were not digging this, right? But we ultimately now know what path Bitcoin took, now that we can look back in hindsight. But when we took the short, we didn't know how it was going to play out. We never do. But some people are right on their calls and some people are not. We have been consistently right. There is a reason for that. It's not because I am lucky. It is because I am a candlestick guy. I analyze price for what it is, okay? I don't try to make hoopla out of it. I keep things simple. There is your yearly opening candle right there. That was January the 1st. So that was the open. We knew that at the beginning of the year, price had broken down. And there is a pattern in a trending asset, and Bitcoin is a trending asset that typically states if you're having trouble trading away from your yearly open, then you could be looking at a bearish year, a very bearish year, in fact. And it ended up being a very bearish year. Very bearish. If you've forgotten, we'll take you back to the chart. There you are. So here is that call that we're talking about right now. Right here. This was the short we took. So you had a short entry here, short entry here. We are not looking for short entries down here. If you are following people that are telling you to start looking for short entries after the asset has decreased roughly 76% in its value, then please reassess who you are following. Retail is always trying to chase the market, chase price. If you're looking for fresh shorts down here, you are chasing a move that the professionals have already banked on. That was 2022. One of the best years of my career. Nailed that short, nailed that short. Now, this is the tweet that I just tweeted today. Here, right there. This tweet also originally was posted April the 12th, 2022. Now, I'm not tooting my own horn here. This is a lesson. This is leading to a lesson on identifying trend at the beginning stages of the periods. This is why, the first of the month, the first of the quarter, and the first of the year are my 3 favorite times to be a trader, because those are the times when those potential ranges are set early, and they are typically set early. So this chart is very ugly, right? And it even says it. It looks like doo-doo. It does. It's very ugly. But if you focus on the yearly opens since 2017, you can see how easy it is for the pros to know what to do. It's just that easy. So when I say the probabilities say lower for 2022, remember this is April, you now know why. When it clicks, hit the follow button. Well, nobody followed, but it doesn't matter. Here you go. There is your 2017 yearly open right there. We're going to show you this on a fresh chart. Trust me. I have it all marked up for you, ready to go. This right here was your open. You spent a little bit of time. This is a weekly chart. So you spent 1, 2, 3, 4, 5 weeks roughly under the yearly open. So there's a bit of time here that was suggestive that, 2017 could have been a bearish year until this happened right here. Your breakout occurred. Look what happened when you came back into a retest of your yearly opening range. This would have probably been January, February, March, April, May, June, July. So you're in between, January and July here when you retested your yearly opening range. That would have been a nice place to get long. And price told you to get long because you were now breaking out above your yearly opening range. You had taken out that liquidity swing there. So, boom. And then look what happens. This is your next yearly open. 2018, you essentially trended straight up. We all know what happened in 2018. You had a yearly open range here. You traded above it for a little bit, then you dropped under it. And then you essentially kept this trend lower and lower and lower all the way to, the end of the year. If we go back to the Bitcoin chart, let's do this on the daily. We want to get the actual yearly opening range here. Just bear with me. This lesson will pay you in dividends, and it didn't cost you a single dime. So right there is where we were waiting. Right in here, there was on-chain data down here suggesting that this was the floor. All the while, us trade talkers were looking to sell when price got back up into this. We were looking for short entries. Only if price could not get bullish validation, give us that validation that price was going to be aggressive moving on above the yearly open, being aggressive or having a lot of bullish momentum, if you will, pushing away from the yearly open. That would have made us have a different bias. But since it did not, it was clearly failing. It was clearly struggling at the yearly opening range. This was our short. And look what has happened since. This is where you are now. So for a solid year, if I was to mark this with a straight line from your yearly open to your yearly close, you have a clear, obvious downtrend. All right? All right. With a midpoint test, look, March, that's first quarter, right? Q1, Q2, you tested this stuff. Boom, gone. Q2s, Q3, Q4, all that. So if I pull up the quarterly chart here, you're going to see that Bitcoin has never done this. It has never posted a year where you had 4 negative back-to-back quarters. So all of 2022 was bearish. Every single quarter posted a loss. 2022 was a bearish year. The most bearish year in Bitcoin's history. Now, I don't mean that by percentage loss. I simply mean that on the fact that it's the only year in Bitcoin's history where it posted negative growth quarter after quarter, all year long. So here we are, 2023. So we're starting a fresh yearly open, fresh quarter, fresh month, fresh everything. So let's see what happens. Okay. All right. Now let me go down here to this ugly chart. Let's get rid of this. It's going to be a little bit difficult at first, but you will start to understand this real quick. No, we want the BLX. All right. We want to get rid of that. So the reason this chart looks congested and ugly is simply because I went back all the way for the entire history of Bitcoin, and all I did was made a candlestick chart. Yay me, right? From the open, I didn't include the very first portion of data that we have on Bitcoin because you can see it started trading in July. So I can't go back to January. So there's no point in even looking at that data. We can look at this data because it is the first year that Bitcoin had. and it had a return of 1,478%. Now, the reason I went from open to close. So this green would be your candle body. Any price outside of this would be a wick. So, yeah, I took 3 hours and built a candlestick chart. But I think sometimes candlesticks get lost on people. They overcomplicate it. Right? Yeah, that's exactly what I've done here. What, just by taking a 12-month chart and doing that. That's what I've done. But it shows you everything, right? So I'm getting to a point. I swear I am. I'm getting to a point. Just hang with me. Hang with me. There is a method for my madness here. Yearly open. Notice how price makes the yearly opening range and then what? Starts to trade away. You get further and further into the year, price is getting further and further away from that. So, anytime you get a pullback back down into that yearly opening range, as long as you don't get like a massive bearish thrust through it, those are going to be looked at as buying opportunities for basically any and all investors that are price action analysts. That is crucial. If you are a price action analyst, then you are understanding me, you are following me, you are understanding that I know exactly what I'm talking about. So that's why when I say I don't need news, I don't need head and shoulders, cup and handles, I don't need anything. All I need is price, because I understand the current dynamics of the underlying candlestick itself on all time frames, right? From down to the daily, all the way up to the yearly. I understand how these candles work. But anyways, you post that growth and then there it goes. So that's the close of the year. For that year, Bitcoin posted positive growth, 1,400% with a wick above. Next year, this year, you had a little bit of sideways price action, to say the least. But what is funny and also quite convenient is notice where that sideways price action stayed at the yearly opening range. So at any time in 2012, had you been a buyer at $4.71, by the end of the year, you would have been up 179% on the year just by being a buyer at the yearly opening range. So just understanding that concept alone can really help you understand trending dynamics. This is how price works on every single time frame. So this principle that I am trying to show you and help you with understanding on a yearly basis is the exact same principle that I use intraday. The exact same. Okay? The exact same. Moving on. 2013. Here's your yearly opening range. For a little while, price traded under it. But back these days, Bitcoin was still very choppy, very wicky, there wasn't a lot of people didn't even know what Bitcoin was in 2012. Only the real hard Bitcoiners, the people that were, involved in the making of the asset, getting it traded online, all that, the founders, if you will. But price action is price action. It doesn't matter what the asset is. Price follows the same underlying dynamics because of investors, because of traders. Trends happen because professionals see what is happening and they essentially start capital rotation, that capital influx, that demand above the open is what continues in assets growth year in, year out for the entirety of the year. Okay? There's your yearly opening range. Bitcoin traded around it for very, very quick period. So by the 11th, you could have bought a retest on the 13th on a Sunday. That was your last chance to even get close to buying the yearly opening range. So when it happens, it can happen quick. And I have seen it take a long time to make any decision at all about which way it wants to go, right? So it's not going to make you a 100% profitable trader knowing this. What it will help you is it'll help you make better decisions for long-term growth on your equity curve. That is all I am trying to do. I cannot make you a profitable trader. I can just teach you fundamentally sound information that will help you be able to identify trending environments. But there you are for all 2013. You did the same thing. You posted a 5,349% return. Jesus, all right? Jesus. Yeah, this would have been a wick. And we all know that this year right here, January 14, 2014, negative year. Here is your yearly open. Wednesday the 1st, January 14. Notice how price could not get above those liquidation points, which is very crucial for a trend to happen. You have to liquidate swing highs. You have to make higher highs and higher lows. The cliched higher highs, higher low, higher high, higher low. Yeah, you have to, because it's the short liquidations that propel bullish aggression. And it goes the same thing for the downside. It's the bullish aggressiveness that propels the downside moves. People buying the lows when in fact they should be selling them. But, there's your breakdown. At any point, you would have been looking to be a seller as closely to 734.27 as possible, just simply because that is, the yearly opening range. And there's where you closed out the year. That posted a 58.69% loss on the year. Now, here is an outlier. See, not every single time does everything in trading works, ladies and gentlemen. Just not all the time. Here's a time where you posted a yearly opening range, traded under it. And you would have been doing better to be a seller at the highs and close to the yearly opening range for the majority of the year than you would have been being a buyer at the highs. I think you can understand that, right? So just understanding that principle in 2015 alone would have kept you A, out of trouble, and B, on pretty much the right side of the market by waiting for price to get as close or even testing the yearly opening range, looking for short entries, right? Until here. Boom. You got there. So it wasn't until Q4 that Bitcoin posted any growth for 2015. Q4, right there. Up well above the yearly opening range. Yes, this is a very aggressive short squeeze. Anything above this is going to be considered a short squeeze. You got a massive push higher here, come back in for a retest there. As long as the demand shows up, the trend will continue. And it did. Up, see daisy. She went yearly opening range, broke down, vice versa. So I'm not going to do that for the entirety of the chart, but I will make this chart public. I mean, technically you don't have to. I mean, just all you gotta do is all you gotta do is look at a 12-month chart, and you'll have this. You'll have this data staring you in the face, and it'll be much easier to look at and interpret. I'm just trying to show you how it works long term. How, we use just because like the yearly open happened 6 months ago and price is there, does that mean anything? Yeah, it freaking does. Especially depending on how long price is spent under or above that level. Right? This is a master class. Are we reloading longs at daily support? Good morning. Solana, 50% in 4 days. We read that. Happy New Year from Amsterdam. I'm glad you're back in business. Yep. I'm glad to be back as well. Pump Moon Lambo time. Could be. We'll see. Sup, folks? RK Solana is on Coinbase wallet as a second option to buy NFTs at 1/100 of gas fees on ETH or other. This is my dark horse in 2023. I don't know what you mean by dark horse, stacking between $4 and $12. Just me. Thank you, Heath. Happy New Year, y'all. Oh, I got you. You think Solana is going to be a massive investment moving forward 2023, maybe possibly 2024. Hey, I'm right along with you, man. As long as it stays above the yearly opening range, I could see it remaining bullish. If you get under the yearly opening range, then you're going to see problems, potentially, right? Because we know that that's how price works. So we got a few days, potentially even a couple months here for price to decide which direction it wants to go. So right now you can see that all of today's range has been wiped out. So, boom, weekly supply is holding for now. What I want you to do is I want you to mark your opening range. You don't have to mark it down to the hour, but I definitely want you marking it on there on the day, the open. All right, not the low, not the high, not the close, the open. As long as you are trading above closing weeklies, not dailies, weeklies, above 16,531, then you're looking up. If you are closing weeklies below 16,531, then you're looking down, at least until you get back above 16,531. This price will be very important for the entirety of 2023, in my opinion, as long as price is trading around it. All right. If you're 175% above it, naturally, it's not going to make a damn bit of difference or not then. But if price is trading at or around it, that will be a time to be, sitting on your hands and waiting for price to reveal to you which direction the trend wants to go. Then you let the trend essentially take you with it, right along with it. All right. I was asked if I'm still setting in my USD JPY short. The answer to that question is a resounding hell yes. There is the entry. Why would I close that short position? Why? There is no reason for me to do that. None. This thing has not even shown a very not even an inkling of change in trend yet from the time of entry. I was set in this very position as long as this thing is trending lower for the rest of my life. If it wants to, it's just going to make money. It's going to continue to build. It's on the right side of the trade. When you're on the right side of the trade, you do not have to do anything. You just sit back and watch your money get bigger. That is the easiest way to make money in the world. There is no other way, no other better way. Investing, if you will, is the best way to get to turn a nobody into somebody. Financially wise, anyways. I mean, everybody is somebody. Please don't take that as the wrong way, because I am a very humble person. Everybody is somebody. But anybody can learn this stuff. Anybody can. It's simple. You don't need it. You don't need to make it any more difficult than it has to be. Than it is. It is very simple. Very simple. No, I am not going to close that position. I already paid myself on this day for the entry. So I took the risk on this day. On this day, I paid myself very handsomely, almost as much as you see there in P&L right now. Wasn't quite that much, but it was 60% of that I banked already. And that's a positive to the P&L. Then the stop loss is sitting there. I cannot lose money on this trade. Not my money. I have already made money on the trade. So no matter what, even if this thing comes all the way back up and makes fresh yearly highs, I cannot lose money. I already made money. You don't get no better than that. Now I will lose this unrealized P&L. Yes, I will lose that. But I will not allow that to happen. I will manage the position, right? There is something here you can use on this chart. You can just basically do something like this from where you made entry. We gained entry on this day. You can simply just pull it all the way over on this trading view. And then right up here on candlesticks, if you mark this as the baseline right there, if you get back in the green, take 50% of that position, close it down, move your stop to break even. Boom. Simple as that, right? Then you're only going to lose, half of the money. Maybe a little bit more than half of the money. It's up to you how much you close out. But you definitely don't allow yourself to let all of your unrealized gains turn right back to zero. Because those unrealized gains, those are the gains that are actually going to pay you the most in the long run. You'll see. When you nail trades like this, if you get one or two of these a year, they're going to make your entire year. They'll make your entire year. The amount of money that I made on this trade, this one entry, I took this across multiple platforms. This one entry has already booked more in P&L than most people make for an entire year's salary. That is not, I'm not bragging. I'm just simply saying these types of trades can make your entire year. So no, I am not closing that trade till we get above 140. We get above 140, then I'll close it down. Or I won't close the whole thing down. I will close a significant portion of it down. All right. Well, we're going to leave that. That thing isn't going nowhere. It isn't going nowhere. So we made fresh daily lows on the S&P 500. I believe we have. So you can see now that the sellers are coming back. And I did say that if you do lose that midpoint, this, you would more than likely see a significant run down towards the lows of day. It does look like that is trying to happen. So, still going to be some volatility at the beginning of the year. And this right here is going to be your yearly open for the S&P 500. Right there. 38.49.50. Because this day is December the 30th. All of it. This whole blue box. December the 30th. This is January the 3rd. It doesn't trade during the weekend or during the holidays. So that is going to be your yearly opening price for the S&P 500 all year long. No matter what, that will remain the price. And it is objective. There is no subjectivity in that. None. The more aggressive and quicker you trade away from this thing means that any time at, any significant time in the future, any pullback up into that region will be met with heavy selling. We could be looking for another bearish year. We could be. But then again, this could be a rundown just to take out the lows. Then we'll see what happens next. Because a rundown to here to liquidate 2022's low even could be a buying opportunity. It doesn't mean it will be. It just means it could be. But you're following the right person. We typically have people on the right side of the markets, at least to make intra-week gains. Toronto checks in. Wish everyone a green 2023. Yep, we're going to do our best to do that. Good morning, everybody. Where is Makatoshi? I don't know who that is. I am here. Welcome, Didic Diablo. Soul Crypto. Kisses and hugs from Chris Paddock. Thank you very much, my friend. Hello, Marioshi. Hey, Ankoshi. I have no idea what that is. It's obviously a meme. Are we reloading longs at D support? I probably would not. Not at this point, because it's still very early into this yearly opening range. Daily support is going to be the yearly opening range. Pretty damn close. Okay? So, if you want to be a buyer there, then yeah. It's a good place to be a buyer. It does not mean that you will make money in the future. But this is always a good place to be a buyer. And if price is trending under it on any retests of it in the future, it is a good place to be a seller. Okay? So we'll know. We'll know probably pretty quickly. We'll know by the second quarter if it's going to be a bearish year or not, or what the outlook looks like, right? Q1 is always iffy. That's why when you listen to the talking heads on Bloomberg, CNBC, MSNBC, all of these financial networks, they're always, none of them's going to give you any real, significant outlooks for Q1. Everybody's waiting for Q2. That's why, guys. That's why. They're waiting for price to give them some kind of a hint. That way they can then make decisions moving forward from that. It's still very early. Very, very early. But we're day traders mainly here on this channel. We do look for macro setups. And that USD JPY short was taken as a day trade, but could end up being, if price continues to go down for the next 5 years, then it will be a macro setup, right? Macro. That's how I determine micro and macro. I take micro entries and at areas that could potentially end up being macro plays. Once you understand that concept, then you too will be able to do the same exact thing. Good morning, and finally, boom, Happy New Year, traders. Happy New Year. Awesome. So yeah, Bitcoin moving down a little bit lower. You're still trading as an inside day from yesterday. So this is not a very volatile day, to say the least. To say the least. I do not like the fact that it is getting that bearish reaction at the weekly supply, because it does look like, the near-term traders anyways, not the macro guys, the near-term guys, the macro guys, it will take them a little while to get in, right? Because they want to let price guide their hands. They are utilizing hundreds of millions of dollars and billions of dollars in some cases. So they are not just going to take a guess on a weekly candle on what they want to do with that money. They want price to show them where it's inclined to go, right? Where is the supply? Where is the demand? We will know that roughly Q2, Q1. I think we'll know that before that, but we'll see. As of right now, we're trading above the yearly opening range. We're going to be bullish. We get under the yearly opening range, we will start to look to be bearish. Not instantly. I mean, naturally, we'll take day trades at daily resistances and daily supports. The strategy stays the same. No matter where the yearly opening price is, you still let the near-term marketplace guide your hand. But this will be a major, major, major inflection point moving forward. Major inflection point. All right. Bitcoin's still green on the week. You got weekly support there. You got weekly supply here. So there you go. There's your three major areas for the near-term marketplace. Currently red on the day. And the point of control, price trading well under it now. So anybody that did get long up at 16 and 7s, they're stuck. They're getting stopped out. That's just adding fuel to the downside. You got people that were long, that got, like me, got long a little bit lower. They probably had trailing stops. I have already taken profits. I have already been paid on my trades. So my stops are still just setting at break even, because the unrealized P&L on a $200 move isn't massive, right? It's nothing really. It's nothing really. Once we start getting up into the 17s and the 18s, then that unrealized P&L will start to grow rapidly, because you will still have leverage associated with the position that is open. And that is what will allow that position to basically just keep paying you as long as price is in a trending environment. I think as long as we don't have any more financial firms hit the floor, exchanges and whatnot for the crypto universe, I think Bitcoin will rebound. So that, that's a nice transition into the second thing that I wanted to discuss. We all know that I typically do not look at volume. All right. Volume by time. I look at volume by price, as that helps with my day trading decisions. I want to know where the volume is at what price, because those are typically areas that you will see your longer term, like higher time frame support and resistances build. That's where your daily resistance or daily support in a lot of cases end up being based on that volume. But by using volume by time, we can make some, technical outlooks, if you will. So all 4 quarters 2022 bearish. Look at this when I throw this on. Okay, now this is the Coinbase data feed. So this may look different on Binance or Bitoshi or whatever exchange you're looking at. I don't think Bitoshi is an exchange. I was just saying that to be a smart aleck. But you got record volumes. And this candle is a baby. A baby. Right? Record volumes. Strange that. All right? This is a tiny candle. Record volume. Candlestick massive. Then the volume starts to step up. Not always, but sometimes this can mark turning places in the market. So look at it as it's going higher here. These are your quarterly candles. A lot of volume. More. Lots more. What happened? Reversal. Boom, boom, boom. You changed direction. So you're doing the same phenomenon here. Massive growing volume, but not really seeing a whole lot of trend growth, if you will. You're not seeing like that those magnificent sizes in candles. Now, going to the upside, it will be different because there's unlimited growth to the upside, whereas there is diminishing growth to the downside. You can only make 100% on any short ever from the time you put your entry, and that is only if something goes to zero. All right, now with leverage, you can make more than 100%, obviously. I just mean with spot. With spot, you can only make 99% to a short side, whereas your gain potential to the upside is unlimited. So, not saying that this is going to be a reversal. I'm just saying there is potential for it to happen based on what I'm seeing technically. And as long as we're trading above the yearly opening range, I will like that as a reversal, because technically it will be, as long as you're doing that. Now, if we get below the yearly opening range and we take out last quarter's low and we see aggressive selling take place after, then we will have to have downside targets on Bitcoin. Have to. Right now, if you take out last month's low, your next bearish target would have to be that. Now, if you look at this line with the crosshairs, where's the next monthly low at? Well, that takes you to here. Those are the areas that downside traders will be targeting. Those are liquidation zones. Any swing low and every swing high has the ability to be a target. This is why we do not look at swing lows and swing highs as supports or resistances, because they're not. They're not. They are targets. Because price sometimes will make a little peak under it and go up, that doesn't mean that this was support. It simply means it was a liquidation and that they were waiting for the liquidation to then be a buyer, if that makes sense, right? That just means there was much more demand setting under there than there was supply. So price will, occasionally reverse after taking out old higher time swing lows and swing highs. That will put you under our resistance of 13.8. Everybody's got 13.8 on the list now for an area of potential support. It is not support. It is old resistance. It has never been support, not once. All right? It is always only ever going to be old resistance. But sometimes, occasionally, old resistance can act as support. It did here. I mean, hell, you opened at that price. You took a slight dip to the downside and up, see daisy. So technically one could say that that resistance did hold as support there. But it does not mean it will when it gets back down there. But it is a very, very big level. This is a monthly, quarterly, and yearly resistance. Very, very, very confluent. There's a lot of confluence down there, if you will. This traded right to it and rejected the first time you tagged it. You see that? I mean, flawless short entry. 13,866.44 was the high. So on this candle, 13,868. 13,863. So it was a $5 difference. That's how accurate it can be. Just take all the things that I tell you guys and put it in a little folder, a little binder, listen to the videos over and over again. If you can't wrap your head around what I'm saying, I mean, it's so simple. It's more advanced for someone that's new. But if you've been looking at charts and you've been watching other YouTubers and stuff for multiple years, then you should have no problems with understanding what I'm saying. All right? No problems. In fact, most people I find think it's just too simple to work, or they can't make it work because they can't fix their own flaws. They're in their humanity. That makes them over traders. They're taking trades at the wrong times when they shouldn't be trading, looking for multiple entries on the weekends, doing all the things that make you a losing trader. You got to get rid of all that stuff. Have to. You just have to, or you're not going to make it in this game. No matter what strategy you deploy, you have to be very, very, very patient. You have to have a ton of self-control to be successful at this. Where is the live trading? The live trading happened very beginning of the stream, my friend. Very beginning of the stream. Very beginning of the stream. We were looking for entries here. Right there. And this was our jump off point. In other words, if we closed an hourly under this, then we knew any long side entries were going to be wrong. This was the take profit. Right there. This was your bullish entry. Right there. There's your take profit. We also even brought up the fact that there is weekly supply right there. That is this area here. You could have gotten short there if you wanted to. I said I wasn't going to, because as long as we are above the yearly opening range, I have a bullish bias. But if you want to get short at these areas, go right on ahead. Be my guest. That is the live trading, my friend. Those are the, you know what I mean? That's what you get. I'm not going to tell you to do it. I can't. I'm not a financial advisor. I'll show you where the areas of interest are. You ultimately have to be the one to decide if you want to take the entry. You ultimately have to be the one to decide how much you're going to risk on the entry. You ultimately have to trade your money, not me. I am successful enough trading my own money. I don't want the problem or the hassle or the trouble or the heartache of trading other people's money. You have to do that. I give you the setups, you take them. You take them. Sometimes it doesn't happen too. Sometimes a trade sets up before the stream gets live. And sometimes we sit here for 3 hours and never even get a trade. We've already made money today. Made money to the upside. Already. It's over with. The trade is done for the day. The next trade will be tomorrow. If you try to get short down here, you're going to lose money. Because you're coming into yesterday's open. That doesn't mean that it's going to hold. That doesn't mean that I'm saying price is going to stop there and go up. Nobody knows what price is ever going to do. Nobody. Not me, not anybody. So if you're just now getting here, we go live around 9 o'clock, Tuesdays and Thursdays. If there is a trade setting up, I try to get live earlier, but I have internet issues where I live. And sometimes I just physically cannot get live in time. That's not anything I can do about that. Please do not hold that against me. But also, as far as this being a signal service, it is not. I am not a signal provider. You can come here and get signals that are better signals than you're going to get anywhere else. But that's not what we do here. My job, my goal for setting up this channel was to give you the tools that you need in order to do this for yourself. That way you can make your own decisions. Right? There's an old daily resistance right there. I definitely wouldn't be getting short right into that. No way, no how. It is also old intraday support there. So, yeah, I mean, the trade already happened. They happen quick. We get in for a few pips, we get out for a few pips. We do that consistently. Make a few percent here, make a few percent there, close out the week up, a few percent, and do that consistently. And occasionally you will nail a nice freaking trade. That trade that I took on the USDJPY was done live. It wasn't done live on the public stream. It was done live in the Discord, but it was done live. Absolutely. Absolutely. The reason for the trade. That one worked out a little bit better than these have been, because it seems like a lot of these setups have been happening closer towards 9:30 as of late. I don't think I would have taken this short on this even if I had a short side bias, because you didn't liquidate the daily high. There's your daily high right there. So I would have been waiting on that to say it for at least for that to occur. Okay. Because in my experience, that's just what the market does more of than anything. It likes to smoke people's stops, generates the liquidity to go in the direction it wants to go. This thing is bullish as long as you're above the yearly open. And that's not debatable. The yearly candle, as long as you are above the yearly open, is bullish. It is not debatable. That is not a subjective opinion. That is a solid, guaranteed fact. As long as you're above 16,531, you're bullish. So as long as we're above this, I will be looking for bullish entries. Next area of potential support, you could be getting it right now. Who knows? There is a supply zone there. So watch 16,599. Watch 16,627 if you are indeed bullish. If you are bearish, you have missed your chance more than likely. All right, so if you are bearish, I'll go ahead and give you a trade setup or a trade idea for tomorrow because I won't be live for the public tomorrow. Tomorrow will just be live for the Discord only. But watch 16,666 if you're bearish. If this is going to be a bearish day, if you close like somewhere down under this day's open, if you close under this price today, 16,611, then I would watch 16,666 for bearish entries moving forward. But I am not a bear, so I am not going to do that. Because the risk lies to the upside as long as the yearly candle is green. Hopefully that makes sense. Happy New Year, Heath. I'm not a daily trader. Can you talk a little bit about the long game for Bitcoin? Yeah, I can. I think it's going to be more expensive. I mean, right now there's a problem with Bitcoin, or at least a problem that I see, and there may be answers out there already that answers this problem, factual answers that say that it isn't going to be a problem, but we were, joking about it this morning in the Discord, and that is the miners, right? The cheaper Bitcoin stays at these prices, the less money they are making. How long before they start capitulating? How long before they have to start turning off the machines? And what does that ultimately do to the price of Bitcoin? Right? You can look at on-chain data and see that, where the parity level is for Bitcoin miners being profitable or unprofitable. And I'm pretty sure at these prices, they are unprofitable. I could be wrong about that. Don't quote me. It's just, I'm just shooting that from the hip. But, I mean, what happens when they can't be profitable anymore? What happens to Bitcoin as an asset? Don't you need miners? Without miners, does the whole thing fall apart? Like, these are serious questions that, one should ask. Once you get the answers to them, if that's a problem that's already, in the code to keep Bitcoin moving higher, then the foundational aspect of what Bitcoin is means that eventually it just will be more expensive. It will just continue to go up. The chart on a log scale only goes one way. On log, this chart only goes one direction, and it is up from left to right. Yeah, you get bear markets, but those bear markets end, and typically they end before the halving. Now, I know everybody's saying that that's not going to happen anymore, but they said that last halving, and the halving before that, and the halving before that too. They always say that the halving's priced in or whatever. But this chart begs to differ. It is going higher. When something is trending from bottom left to top right, that is something that you want to be a buyer of when it dips. You want to BTFD that asset. You don't want to be a BTFDer on an asset that looks exactly opposite of this. Oops. Let's do this. I don't know what I did there, but yeah, you don't want to BTFD this chart. This chart right here, I'm a seller on. Always. Every swing high, I'd be a seller on this chart. Every major swing high. Because this chart is a dead asset. But that isn't what we got. This is. So longer term on Bitcoin, I think it will be worth much more money. I don't think you're going to see prices like everybody's looking for. I definitely don't think you'll ever see this low again. I don't. Now, before this year, Bitcoin never revisited an old all-time high. Never. All right? Before this year, Bitcoin never revisited an old all-time high. But it did this year. One thing Bitcoin has never done, ever, I'm not saying that it can't, but has never done, is taken out bear market lows once they've been set and you made new all-time highs. You have never went back and taken out that low. Never. That's important for me for an asset to look to be an investor in. It tells me that long term there is demand for the asset. I know they're looking for Web3 solutions and all kinds of stuff right now. I mean, maybe some of that stuff makes Bitcoin a little bit more obsolete. Maybe something else comes along that's better than Bitcoin. But right now, Bitcoin is, for me, the best asset to look for insane growth in. Even in a higher interest rate environment. Please understand, guys, that this isn't the first time that we've seen higher interest rates. Bitcoin still goes up in higher interest rates. It's going down now because we had QE to infinity, essentially. Right? That's why you got such a massive run up. But I think ultimately, long term, people still will find value in Bitcoin, whether it's to simply take money and hold it or transfer money. And it's cheaper to transfer Bitcoin, say $1 million of Bitcoin, to somebody than it is through this network than it is to do it through Western Union. You know what I'm saying? So, like, just for that purpose alone, Bitcoin has use case. But as far as its real use case is to just hold it as a store of value. I think as long as Bitcoin is that store of value, I think Bitcoin will be trading for more money long term. I think the curve remains to the upside. I really honestly do believe that. I could be wrong, like many other people that believe in Bitcoin, but hey, if I am, I'll short it to zero. I will short it to zero. So either way, I am going to see returns on my investment one way or the other with this asset. One way or the other. Prices go up. Yes. On this chart, they do. Yeah. Do you see 10, 13K in the future or in the midterm? Yeah, I definitely can. 13,899 is a price I could see Bitcoin retesting. But like I said, there is a lot of things happening on the chart right now, especially that lead me to believe that there is a slight chance that it doesn't. There's probably more of a chance that it does than not, but I think you're going to see a reversal soon. I think the lows are going to print really, really soon. If they haven't already, there's a strong, an argument could be made that the lows are in. We know that on-chain data suggests that we've already seen the capitulation that everybody's been looking for. We can pull up some of that on-chain information if you want. I'm not a big on-chain guy. I am a price action analyst. I am not an on-chain analyst. There are other much better suited individuals out there to follow for on-chain analysts, like Glassnode, for instance. You can follow them. They have a YouTube channel. I actually made a couple posts about Bitcoin showing potential signs of capitulation already on chain. Then not even 3 days later, they come out with a video saying the same thing. So that tells me at least now I'm starting to learn a little bit about on-chain data, right? At least there's that. But yeah, there's a few things that show us that we could have potentially already seen some capitulation. And if that's the case, then you might not be getting that nasty downside wick that everybody's looking for, with a big, a big move lower with a wick that sticks out like a sore thumb. You don't have to get that for capitulation to occur. Capitulation just means maximum pain when your older coins are they're getting spent basically because they can't stand the pain anymore. That is capitulation. And when the majority of everybody does it, that's capitulation. When everybody sells. See, this first run lower, that was due to Luna. Like, this could have ultimately been the low for the bear market. We know it's not now because the S&P 500 made lower lows in June as well. So, the fact that it kept going lower and then the Luna thing happened, that gave fuel to the fire for that next big downside slide. A lot of people thought that was the capitulation then. I was included in that. And then FTX happened. I mean, these are all things that could, as long as no more of that crap happens, then you're probably going to see a whole lot more of this. Right? A whole lot more of slow, sideways, choppy, boring price action. But there is one thing that can be said, and that is this. This metric has basically essentially called the lows for Bitcoin in its entire past. Now, it does not mean it will do it in the future, but it definitely historically has done it in the past. And you can see that you have been in a mass buying zone for a long time. At these prices, typically people should be looking to be buyers, not sellers. Right? Typically. This is when we were trading up in here, when price was trading up in here, I was telling everybody on this channel that I was waiting before I would start looking for heavy accumulation once we get back down into this region. And we're here. So my sell side bias has changed. But only on this asset. On the S&P 500, can we make new lows? Sure. Is it likely? I don't think so. I think people are looking for a '08 style crash and they're not going to get it. Right? I think people that are betting on an '08 style crash, they're actually betting on the financial system that we know and have today as the end of it. And if that occurs, then yeah, these markets are going to do a lot worse than '08. You won't be able to buy milk. You better have some cows in your garage if you drink milk. You know what I'm saying? Because you won't be able to buy it. Then shorting the asset won't make a damn bit of good, do a damn bit of good, because your money will be useless. It'll be worthless. It'll be use and worthless. So no, I think money managers, they're going to start putting that capital back to work. We've already seen that capital rotation happening. People looking for the VIX to have that blow off top before they become a buyer. They are totally ignoring the fact that the money didn't go into the VIX this year. The money went into the dollar. And we have seen that blow off on the dollar. We are short the dollar up here. We seen this. We were all over it. Everybody else just ignoring it. This is literally the only asset that went up in 2022. Literally the only one. Everything else has got killed. Got killed. All of your other risk off assets where capital usually rotates into in bear markets, absolutely slaughtered. This is one. This is the other one. Slaughtered. There's some capital rotating into them now, right? But ultimately, yeah, I don't think the VIX is going to be that bear market, that call, if you will, that says the bear market is over. I think the bear market will be over, and a couple quarters will go by. And when the markets stop making lows, then you'll see more and more money start to flow back in. You'll see the market start to regulate a little bit better. Will it go back up to all-time highs? No, I don't believe that. I don't believe you're going to see new all-time highs in 2023. I don't believe you'll see all-time highs in 2024. I believe for a couple years you'll probably see sideways price action. But there's opportunity in that. There will be trading ranges that will be formed. There will be obvious areas to look for entries to make liquidity. What do you think on the SPX? Sell of from 6 p.m. last night. Sell off from 6 p.m. last night, 38.70, then rally to 38.85. New York open and sells off 38.17. Do you think still correlation between these? Well, I mean, it's just today's range, right? I mean, there's still going to be a lot of time until you get that opening range, yearly opening range situated, right? Today's the first day of trade for this asset. That's Friday. This is it. So that's your opening price. So as long as the S&P 500 is trading under 38.45, then yeah, you could potentially look to sell resistance. But remember the money that went into the SPY, billions and billions of dollars at 364 and 365. Remember that? Somebody looked at some data somewhere, took that data to their boss, who's the manager of the firm, and said, look at this. And then he looked at it and he said, yeah, I want you to buy 36 or $3.6 billion worth here, and then $3.8 billion worth there. And prices have not been back there. There is a clear and obvious support being built right here. Now, this looks nasty. I'll give you that. But as long as you're above this, at least 365, to me, the risk is to the upside. So, I mean, it's too early at the beginning of the year for me to make any long-term calls. My style of trading, price action analyst, is I allow price to show me what it's doing, then I start making my plays. I am patient. Like, if I'm a sniper and I'm sent in to do a job, my main job, my goal is to take out my target. I cannot take out my target if my target has not revealed himself. I just have to wait. I have to stay in my position. I have to look through my scope, and I have to wait. When my target shows his face, then and only then can you drop the hammer. It's the same way as trading. Same way. I can't do anything until my target reveals itself. My target being direction. I need price to show me a direction. Right now, all we got is this longer term trend, which is down. So I'll leave that decision up to you, what you want to do with it. But right now, currently, you're under the opening range. But you're not getting much bearish reactions down there, are you? This looks like a trap. So watch this as a trap. If you can't close another daily under 38.11, since that was support, then you clearly broke down below support. Clearly. I mean, that's a legit breakdown. When price closes and the midpoint range of the candle is at the support, that is a legit breakdown. We typically look to sell resistance in those instances. And then the very next day, you put in almost a bullish engulfing. So the last 3 days, price action is still bullish. It's still like order flow still looks more bullish than bearish. You got the bears stuck as long as you're trading above this price. They are stuck. So if they shorted there, imagine what they're doing now with yesterday or Friday and today. They're exiting positions. How do you get out of a short? You have to buy back in. So not only will you have people looking at this as potential demand, you will literally have short traders being that demand because they're trying to get out with a smaller loss. So that's why you're seeing this reaction that you are today. It's a pretty muted day. You're only down 0.2%. Like, you're not even down a whole percent. Bitcoin is still just trading at unchanged on the day. Very muted day. The range is small. Not a lot to do today. We'll have more information tomorrow. Tomorrow will be Wednesday. And then Thursday, hopefully we come in here and we nail a home run trade. We will nail them. We've done it. We've done it before on these streams, man. We've killed it. We've made some nice entries. I just can't give you that right now. Right now, we got to give the yearly opening range time to see if demand is going to come in here. I mean, I find that price doing this above all this. I mean, if you just fib this range, like all the supports and supplies and demands and everything, just by looking at the fib, this is nothing to be concerned. This is a bullish rally. This is not a bearish pullback. This started to look like it was going to be nasty, but ultimately, what's it done? Nothing. Nothing. What are they waiting for? What are they waiting for? Well, let's pull up daily effects. When's the next CPI Fed meeting? I can't pull up daily effects. I keep getting this stupid freaking pop-up, man. What is this? This is a lie. IG is the brokerage that they are exactly associated with. The only thing I can think of is they're no longer promoted. What does that say? Provided by IG. I don't know if this is a phishing thing trying to get me to click that, but I am a U.S. resident, so I'm not clicking it. I haven't gotten back any word from anybody from Daily Effects. And their site is free, so I don't get paid anything by bringing it up. You know what I'm saying? But I don't know what that is. I thought it went away the other day, but it's back, so I don't know. But I'll find another find another FX thing to look for Fed dates and stuff like that. The Fed Lookout tool could probably provide that, couldn't it? Let's see what it says. Countdown. Yeah, it tells me right there. The next FOMC day is a month away. We just started January. So you got January getting started. Very early into the week, very early into the month, early into the quarter, and you're extremely early into the year. So be a little bit patient. You don't have to be in a trade every day. In fact, if you are trading every day, you're probably not going to make money. Can you take a look at Apple? Looking to pick some up for longer term hold, eyeing 122.15. Yeah, let's go look at Apple. We'll look at Apple, we'll look at Tesla, and then we'll wrap it up. Because the questions are muted, or there's not many of them, is what I mean. Apple just took out a fresh monthly low. And then you said specifically you were looking for 122.15. And that's probably because you're looking for this support. Yeah, I mean, that's the next liquidation point. But what I would need to see now that we've liquidated this low, in order to aim for this low, I need to see aggressive selling start to happen pretty soon. Today is a little aggressive. That's a bearish engulfing. But this could be a buying opportunity right now. I don't know that it is. But it could very well be a buying opportunity. So let's see how today closes. If today closes back above 125.87, then I might take a shot at it at least up to 130. That'd be a $5 move. I think it could at least get up to there if it does indeed get back above 125.87. Now, if you continue to see that droppage, that sell side, go lower from here, then something else is going on, because it did just take out a massive swing low. All in all, Apple's only down 31%, so it ain't like it got killed. I definitely like what you're looking at, right? You're looking at support, so keep your eyes on those supports. I think you'll do just fine. Forex Factory. Quarterly support. Gotcha. That's an even better one. But you're going to have to get through that as well. But yeah. Yeah. If you could get down there, man, potentially be a fantastic place to be a buyer. You can see how long it took during this bear market there. So everybody was watching this as the area to be the buyer, 23.83. You can see how it acted as perfect resistance there. And then how it traded down to it right there, acted as perfect support. But then this happened. So people bought this up, then they got stopped out. And then you had one last quarter liquidate both those lows. Boom. Gone. Something similar could take place. So keep that in mind. But for a long-term hold, yeah. I mean, what's they make money, man. Look at these earnings reports. They're a good company to own. And you're down 31%. It ain't as bad as Tesla or Nvidia or any of these. Why do I keep doing that? Any of these other things? Tesla getting beat up. Tesla's aiming for this now. The beginning of the year. Look at that. Straight down. You get under 108.24 and then immediately start to get bullish on Tesla. But there's something else going on here. This is a steady as you go downtrend. That's been a one-sided market. Yeah, it got killed. Eventually, people are going to start buying it. I think he took a poll the other day and said everybody wants him to focus more on Tesla, or he's going to step down on as Tesla's CEO or something. So, I mean, if you just buy Tesla today, you're getting it for 73% off. You may never be able to say that again as long as you live. Imagine that. You may never ever be able to say, I bought Tesla at 76% off again in the future. What people see as dire, and they're like, acting like the moon is going to fall out of the sky and the whole financial world is going to collapse and all this. I see the best opportunity for a wealth redistribution than I have ever seen right now. If you are poor, you need to start buying some of these companies, especially the ones that aren't going anywhere. Tesla is cash rich. Cash rich. They have billions of dollars they can throw at stuff, at problems. They are going to start going back up soon. In fact, I might even today, if we get under 108.24, I might pick up a few more shares. Just cause. But that's just for a long-term hold. That's not going to be a day trade. That's just a buy and hold. That is if we get that bullish reaction I want to see. And it does look like it's about to push down there. It doesn't have to, though. But for it to get back up to there, just swallowed that gap right back up, then gap down. It does look like this is the target. That would piss off so many people too. Everybody that bought this thinking that they bought the absolute low. Just run down there, take out their stops, and then go. Oh, so many people would be so mad, heartbroken. It's happened to me so many times. It doesn't mean that will happen again, though. Keep that in mind. Make sure you use a stop somewhere. 2 or something. Big wide stop. I think 76% off Tesla's a good buy. Four Fed meetings and important dates. Forex Factory. Yeah, there's a couple other people that said the same thing to me. So I will check them out. Let's see what happens with Tesla right here. We'll give it a second. But we can just leave it up like that. Where's Euro at? Back down. Euro got smoked today. Smoked. Yeah, yearly opening range is right. So let's get rid of all that because now nothing matters but this. Any pushback up to that's going to be met with heavy selling if People are looking for a euro to come back off. And they could be. If they are looking for the euro to come back off, then I imagine Bitcoin will probably make new lows as well. Because that means you're going to have a strong dollar. Strong dollar is not typically good for Bitcoin because that's what Bitcoin's traded against. I think stock market goes lower until first or second quarter. Then the real end of the interest rate hikes happen. I don't think that the interest rate hikes have to stop in order for capital to rotate back into these risk markets. I think people that are waiting for that to happen before they start to invest are going to be late. And the whole reason for me thinking like that is based off of one thing. And that is this. This is your inflation rate. If this keeps going lower and starts going lower quicker, then people will start allocating those funds right back into some risky assets. Yes, they will. They will. Because they will know that if this starts to happen, see, like, I don't even have to watch the Fed or listen to the Fed, because if this number keeps trending lower, then you're right. Then we know, yes, the Fed will have to slow their roll on rate hikes, right? They will. If that unemployment number starts to go up higher, same thing. Because they're only willing to go so high on unemployment. They're not wanting to get unemployment out of control again. They have a little bit of wiggle room still yet to play with on this. I can't remember the exact target, but it's somewhere between 4 and 5. So they still have a little bit of wiggle room here, but they're not going to be hiking interest rates anymore if you get up into these areas. So there's two numbers there that you can watch, and you can stay ahead of the Fed: CPI and non-farm payrolls. Because those are going to be the numbers ultimately that force the Fed's hand. We know it. So, yeah. I'm just looking for these assets that I know are really good assets to own in a portfolio for longer term growth. This is doing exactly what I wanted to see it do. I honestly thought once it topped out back in June that would have cemented the bear market lows. But it didn't. Not on Bitcoin or the stock market. But I thought that would have done it. That being the high, I thought for sure that would have done it. What made it happen, what made it so bad was for like 3 months in a row, if you remember, we stayed right at like 8.5. And then we got like an 8.4. And then we got like an 8.3. You know what I mean? It was like barely moving. The last two that we've gotten have been really good. You've dropped like 0.5% both last 2 months. So you can really start to see that what the Fed has done show up in the CPI data. But, you may have people that are just fundamental analysts that are better at analyzing fundamentals than I am say that is completely wrong and horseshit. stick to candlesticks because you don't know what you're talking about with this stuff. And I would say, you know what? I will. Fine. Screw you. Because I do just fine. What I would love really right now, you know what I really want? I want someone to friend me on Steam that has Modern Warfare 2 so you can help me on DMZ. I keep getting my ass beat on DMZ. That shit is so hard. And when I'm bored, when the market's not doing nothing, I'm on Modern Warfare 2 getting my ass beat. It's trade talk. Find me. Please, friend me. All right, you guys, we're going to go ahead and lock it up. We'll be back again. I'm going to watch 108.24 on Tesla. I want to see how price reacts once it gets under here. If it continues to be bearish and gets a lot of bearish aggressiveness from down there, then I'm not doing anything with it. If it gets down there and gives us a little bounce, I might take a small little entry on it. You know, nothing big, just to buy a couple shares to hold. I can afford a few $100 just to buy a few 4, maybe 5 shares of it, just because it's so cheap. 76% off. That is not bad at all. Not bad. I like buying stuff when it's cheap. It's much better than buying when it's expensive. So, might do that. But we'll be back Thursday morning, same time, same channel. You guys make sure you come back for the Discord. I'll be around all day. You guys hit me up over there. If you need to, we will be watching. Thank you guys so much for your support, always. Thank you so much for being here. Aaron, thanks for a super chat again, my friend. I really appreciate that. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.